Hey, I'm Wes Bishop. Welcome to the Wes Bishop Show. Today we're going to go through TikTok videos and review what the audiences have asked us to look at and give some examples of what you should and should not do in this industry. So with that, we're going to start the first video.
Here's how I buy 5 houses in 1 year. Number one, you gotta find a fixer-upper either on investorlift.com, Zillow, or from a wholesaler on Facebook groups. Number two, once you have the property under contract, you're gonna take it to a hard money lender like this one right here that will pay 100% of the purchase price plus all of the money to renovate the property itself. Then you go ahead, you close on the property, and you fix it up with the bank's money. And from there, you rent out the property and you get a tenant to start paying the monthly rent. Once you've got your tenant paying rent every single month, you're going to then take it to a DSCR lender to refinance the property and pay off your initial hard money lender off. Now you've got house number one that has a tenant in it paying you every single month for owning that house with zero money out of pocket. And you keep doing that over and over again. And before you know, you have 5 houses in 1 single year.
So having 5 houses in 1 single year is a lot tougher than you can imagine. The DSCR loans are great, but you better understand how they're used because at the end of the day, they can come and take those just for a rent being off. So you will have to adjust your rents on how you use your DSCR loans. The ideas that she has, you can buy houses like this. They're great ideas, but just make sure that you follow through with looking in the background of every loan. Every lender out there that has money hopes you fail. And don't ever forget that. At the end of the day, they want your house. They don't want you to have it. So, you put 20 or 30% down. Who wouldn't want a loan like that for you to fail? There's not a bank out there that won't take it. So, with that one, let's go on to the next video.
Investing in real estate is the worst. Because even though you might be a multi-millionaire or billionaire even on paper, it is a very illiquid asset. Meaning that I could have $1 million in a house right now, but I'm only getting a couple $1,000s each month. And I might be pocketing even less than that after expenses and mortgage, insurance, and taxes and everything else. Because that $1 million is tied up in the equity of the asset. And the only way to access that $1 million is by either getting a cash out refied loan on it, selling the house and possibly paying the taxes on it, trying to do a 1031 exchange, all of which take time and rely on the real estate market. And in markets like right now where things have flatlined, it makes it even a little more difficult to access that money. But ultimately, because it is invested in a scarce or limited asset like real estate and land, not only is it protected, but it's growing above even inflation, growing against everything else. So while you should invest in real estate, understand that you will feel cash poor.
So a lot of people see investing in real estate as a very bad deal. Investing in real estate comes with problems. It comes with responsibility. And when you buy a house, if you're personally buying it and you put $1 million in your own house, it's better than paying the interest on that house. Because over a 30-year period of interest, let's just say on a $400,000 loan, you're going to pay $1 million back in interest plus. It's $1 million plus dollars just in interest in today's market. So my first opinion of this is you should buy a house. You should pay for your house and not touch that money until you have extra money to go out and buy your own investment houses. But don't take the house money away from your personal home. You need a personal home. It needs to be paid off as quickly as you can get it paid off before you even think about investing. Because if not, you're just swapping money to buy money with interest. And it's ridiculous. Pay your house off, get your home done, and then go find more money to invest with friends, capital, banks. There's a lot of different places you can buy houses. You can go through foreclosure loan, or go to the foreclosure sale every Tuesday in Texas or every first Tuesday in Texas. You can go to banks. Banks have a lot of auction sites up right now that make it easy for second-time foreclosures. That we call them loans. So, get your home paid off. real estate's a great market. I had a lady in here a couple of days ago. I sell homes now for D.R. Horton. I've been in this industry for over 30 years. Love what I do. I've done developing. I've built many homes, and I've sold many homes. And today, came out of retirement to work here and do a little bit of sales. I've got boards sitting at the house, so this is why I came back to work, is to be able to help people. But this young lady came in last night, and she had just moved in from El Salvador about 5-6 years ago. Got in a situation with her mom and family member and got booted out. And she luckily had a good job and was making money, and got her apartment, pays a considerable amount of money in rent. But she didn't understand home ownership, and she's like, yeah, I gotta wait. She's gonna get her deposit back versus getting equity back. By owning a home, you have opportunity to get equity. One thing you don't want to do is to be in a situation where you're selling against too much competition in the neighborhood. So when I see people that are looking to own a home, I want them to build it as an investment. Having real estate as an investment is a great idea. One, you get your first house, you learn how to get it paid off. Once you get that first house paid off, you start stepping into new stuff and buying more investments. Or let's just say you sit there 4 or 5 years and the market's going up every year, always does. It's rare that it flatlines or slows down. It's just always going to, should always get gradual income growth. But when you walk out of a house after the 5th year and you got 50-60 grand in your house, it's more than you had when you bought that house. It's probably more than you put down on that house when you walk away. It's 50 grand that you can buy maybe another house, pay off the next house, just money going forward, or just get ahead on your bills. Sometimes you get in this position where you got to sell your house and you have 50 grand left. You're not getting your deposit back. You're getting whatever the sale brings back to you, the value of this house. So now let's move on to this last video here.
Go to the bank, get you a rock.
Brother, all right.
Put $3 grand a year in there, right? Don't touch it till it matures. And it matures every day. I guarantee you $3.7 million.
You guaranteed
3.7.
What's your name?
Kevin Johnson.
Kevin Johnson. Now listen, when I get that 3.7 million, I'm gonna be looking for you.
Best advice I can give you, start looking at investment. I'm gonna show you one quick investment you will never imagine. All you gotta do is go to Morgan Stanley.
I got me Morgan Stanley account.
Okay, go to Morgan Stanley and ask them for mutual fund and energy.
Right.
Take 20 grand. You get 3 grand every 90 days.
Forever. One-time payment.
One-time investment.
So me, I'm 23. I plan on living to 107. So 3 grand for 107 years for 90 days.
Yep. Every 90 days. Here it is, $12,000 a year.
I would not imagine anybody plopping that kind of money down and expect to get 3 grand in a commodity that is definitely not going to produce that. There's nobody in the world getting that kind of production on that kind of a con.
And that I'll hop in there because I wanted. That's what I wanted to throw at. That's why I threw this video at you, because $20,000 investment one time. That's it. It's in a mutual fund.
Not gonna
It's
happen.
making $1,000 a month is what they're saying. $3,000 every 90 days. So let's say $1,000 a month. That is a 75% APR
Not going to happen.
or annual yield.
Yeah. So, my opinion, this guy's off the charts. IRAs are good to have. It's always good to float money into an IRA. But Mr. Kevin, I don't agree with the analysis that you've put out on this one. So if you have some information and you'd like to get on our show and talk about it, we'd love to hear from you, Kevin. Don't ever forget it. We'll see you soon. Have a good day.